Boy, what an April we've had in this market. The bulls stepped right on in and just roared all the way through. So, April we had some really big earnings come through. The market's looking good. Everybody's loving it. But I'm going to walk you through the chart and show you why I have some cause for concern. Nothing major, but, we've made a really, really big run here. We want to make sure we're doing our due diligence. I'm going to walk you through the SPY chart, give you a trade that I'm looking at, show you how to set it up. And then we're going to talk about crypto, because crypto is doing some things now that we want to pay attention to and how we might play those as well. So let's jump right on in. Starting off, we're looking at the light crude futures. And what I wanted to do here was just to highlight that even with this big all-time high that we've hit in the SPY, that the oil futures have not really changed. We've just been going kind of sideways. We had some news, it dipped, bounced back, dipped again. And the latest news right now is we're still nowhere close to getting the Strait of Hormuz open, right? That's the key. 20% of the world's oil is stuck there. And we got to get that thing kind of going. Otherwise, we're going to be in an energy recession. And that's not going to be good for anybody in the market, because as you know, AI needs energy, and AI is what's driving these all-time highs. So let's jump right on into the SPY chart and see what we have here, right? So we hit our low here back in the end of March. And April, we just went straight up. This is a problem for us on the chart structurally, because there was no point at which the market just kind of paused, except for maybe right here in that 700 range. But it went straight from the bottom, straight to all-time highs, and continued to new all-time highs, right? So right here, we want to see what would be healthy for the market is a little pullback. But we also want to pay attention to, okay, where could this thing really go, right? So in order to do that, we're going to have to do something, because there's no history here. We're at all-time highs. We've never been here before. So what we're going to do is we're going to take our Fibonacci retracement here, and we're going to start from this bottom of this dip, and we're just going to touch it to the all-time highs we had on Friday and see what we go. What I do in my Fibonacci is, if you go into the settings, is you can actually add more extensions to this, right? So as you get into the style, so you can add points above and below the 1 and the 0, which is what I've done. So I've got my extensions here at 1.618, which is a key level as well. And then we also have these other levels here that I've marked up. 1.236 is another one we're going to pay attention to right now. So by putting the Fibonacci here from this low to our current high, this high is not necessarily valid yet, because we still do need a pivot to prove it's a swing high. We haven't stopped going up, right? So we don't know if this is really the end for us to be able to measure, but it's the best we have at the moment. So let's take that, and then I'm going to pull on the scale a little bit here so we can squeeze in some other levels. So the next level that we have to the upside is 763. Now, that sounds all good and well, but I do also like the little round numbers here. So 750 would be the first level I'd watch. If price gets up there and starts reversing, then you can expect price to pull back a little bit. But if not, if it keeps going, then expect to see 763, 765 if you're playing at home to see where the next level might be. So if you're very bullish on this market, if you think it's going to continue roaring up, that is the next level I'm watching. But for me, given all the news and everything else that's going on, with the Strait of Hormuz still closed, I'm going to look for a pullback. And structurally in the market, we also always want to see pullback. So you can look back at the chart here. If we look to the left, as the market was moving up, there were always pullbacks and dips, right? Dips, dips, dips. We should expect another one here, especially with these moves up. The other thing that draws my eye, and I'm going to remove our Fibonacci here just to clean things up a bit. The other thing that draws my eye is the volume down here, right? So when we were going well and everything was moving along in the market, the volumes were way, way, way up here, right? So we had a lot of much higher volumes. Our average volume for the 20-day average of volume is my little orange line here. You can see it's much higher than where we are now. So with volume dropping off, that's telling me that a lot of the institutional buyers, a lot of the people that would be participating or should be participating in this market are not, right? So there's a lot of money sitting on the sidelines here while we're ripping all the way up to these all-time highs. So it tells me this is not sustainable, right? So at some point, the people that are driving this up are going to want to take profits, and it's not unnatural for this to pull back to a 50% retracement, meaning you're gonna from this entire move here, if we measure it, right, this was a move of 17%. I could see this pulling back by 8-9%, which would, if we use our Fibonacci's as the easier way to do this, pull us back to the 50% level would be 683, right? So slide over here so you can see that a little better. 683 would be a halfway pullback from this huge move here. That would not be a bear market. That would be a healthy correction. And it would be okay if it did that and the market could just get back to that level and bounce. I, on the other hand, do still love to use our our support and resistance that we've had before. So this was the previous all-time high here at 697 until we broke out of that in April. So what I'm expecting to see is maybe we don't pull back all the way to 683, but pulling back all the way to 700. So that's the level I'm looking to play, right? Is that pullback to 700, and at that point we could see if we bounce here or if we keep going or whatever. But what I'm going to look to do now is I'm going to walk you through the trade of what this might look like in Thinkorswim and what I might do. I'm going to look to put a put option on because I feel the market is going to pull back. And I'm going to give myself a little bit time in that put option. So let's jump on over to Thinkorswim, and I'm going to walk you through how I look at that trade, how I set it up, and then the profit take profit ratios that I'm looking at that makes it a good trade. All right, jumping right over to Thinkorswim. Thinkorswim is the broker I use to execute all my trades. I like using Thinkorswim. It gives me a lot of information right here on the platform that I wouldn't get with a Robinhood or some of the other platforms that you have out there. But I like, I'm going to walk us through kind of what we do. What I don't like to do is I don't like to pick these shorter term options, right? So I'm not going to look at anything expiring next week for this put play that we're talking about, where I expect SPY to pull back to the 700. What I'm going to do is I'm going to give myself some time. So I'm not even going to go to June, which is 39 days. I like to see that 45 days or more. And I don't want to go too far out, but I'm going to go ahead and look at the July. So, and I'm sticking with the monthly options here. As you can see, there's a bunch of other weekly options we could choose from. Some that are kind of just filling out the days here. But I like the monthly options because that's where a lot of the action is anyway. And you're going to see that real quick as I talk about the volume and the open interest at the levels that we were looking at. So as I scroll down here, we were talking about looking at the 700 level. So we think price is going to pull back to 700. So what we want to do is maybe look for buying this 700 strike so that if price pulls back very quickly to 700, we can make some money, right? So looking at this, the price for this 700 strike is going to be roughly about 865, call it, somewhere in between the bid and the ask. And if I kind of just select that option here to buy, you'll see if I drop my dot here down at the bottom right, I'll drop my dot right in the middle, which is between not the bid, but the mid price, which is halfway between the bid and the ask, to get 865, right? So I know I'll be able to get filled at that level if the market was open today. That's kind of how I like to try to get my fills done. And especially on something like SPY, the bid ask is never wide. It's very tight. So you're going to get a good price if you do that, and you'll have a high likelihood of getting filled, which means your trade gets executed if you pick somewhere in between, right? So that's what we're looking at, 865. So a couple other things let's see here on this is I want to look at the open interest and the volume just to kind of see what the rest of the market is doing, right? So if I look here, one thing that caught my eye right away was at the 615 level, there was on Friday 45,000 contracts, right? You have to then multiply this by 100, right? So we're talking about 4.5 million shares. This has to be an institutional trader if it was one trade, or maybe a bunch of them setting in some protection, right? I don't believe 615 is a level that is way below even the lows in March. So this has to be kind of a protection level, right? Where somebody's protecting their portfolio just in case the market crashes again. They'll make some money on the way down, obviously, and then they'll might even make or protect their portfolio so that they don't lose on the positions that they have on our holding right now. We also see the volume. So the volume it resets every day, right? So from zero. So that's how I know this is from Friday. You know, markets closed right now over the weekend, but this is what we're looking at. The other thing I notice is the open interest. The open interest is the amount of contracts that are currently open in the market right now. They haven't been settled. So these are all active contracts, and you see even here at 590, there's 104,000 contracts open at the moment. So we're not playing way down here. I don't think we're gonna see these levels right away unless something catastrophic happens in with the war and oil and everything else, which is very possible. There's a chance here, right? But if I'm looking at these deltas, what the option market is telling me right now with a 6 delta or a 5 delta is there's a 94, 95% chance that this will not happen, right? So that gives me further reason to think this is just protection, that somebody's protecting their portfolio just in case something catastrophic happens. All right, back to where we're paying attention to. 700 strike level, we have 19,000 contracts open here, which is still excellent, right? So there's liquidity. What this means is if I get into this trade and I pick the 700 strike, there's going to be plenty of people on the other side that are willing to take my trade, so I can get in very easily. And then on the other side, when it's time for me to get out, there's going to be also people there for me to get out of that trade as well. So I'm feeling very comfortable about this. SPY is the most traded ticker out there, right? So you're going to see huge numbers here all the time. You just want to look for those outliers and kind of see what the market is doing. Try to interpret them as best as you can. So 700 level, one of the tools that I'm going to show you here is the Theo Price. So Thinkorswim has the theoretical price. If you want to add this to your option chain in Thinkorswim, you're going to have to actually come here just to the left of here. You'll see some columns that you could set up, and these drive all the columns that you see in my option chain here at the top. So Theo Price, Delta, open interest, so on and so forth. And you can customize this, and you're just going to come in and push Theo Price, and then you can add it to your chain. So what we're going to do, the nice thing about this, it allows us to analyze the price of the option, where we think price is going to go, right? How many dollars is it going to change? And then also set our own expiration, and then see what theoretically this option should be worth on that date, right? So what I'm going to do is I'm not going to go all the way out to July, as I said. I think if we're going to get this pullback to 700, it's going to happen by the end of the month. So I'm going to pick May 29th, right? And we're currently sitting at 737 here for SPY. So I'm just going to put -40 here, just to use a round number, right? So instead of the 37, I could use just 40. So that will give us, if SPY hits 695, which based on our analysis, that's well within our range of the 50% pullback, which I think we had around 683, right? But we're getting the 700 strike, so we're sitting right back in the middle of that, right? And so I'm going to say that. So what we're saying here is we have what we're saying is by May 29th, right? If the SPY drops by $40, okay, which brings SPY down to 695.53, right? This is the setup that we're looking at, right? So what's going to then happen to our 700 strike? So if we come down here and I go over to my Theo Price column, which is the furthest one to the right, this 700 strike put, right, will be worth, or theoretically should be worth, $20, okay? So that's what we're looking at, and we're going to pay $865 and turn that into 20. So you're talking about almost 3x your return on your money. At any point you can close this out. So if you double up, you get to $16, $17 for this put because price pulled back. Certainly feel free to double up, take your money off the table, and move forward, right? But this is the risk reward ratio that we're looking at right now, is being able to put up 800, right? Because every option contract is times 100, so $8.65 a share. We're going to put up $865, but we could be seeing $20 per share if our plan works accordingly, right? So if I go, by May 29th, if the SPY drops by $40, I could be seeing $20 here, right? So the other option that I could probably look at here is the 715. 715, as I said, was, you know, halfway between where we are today and our 700 target, which will give us a little bit more room, right? Because if price continue to go, there's extra $15 to our target. But this one costs a little bit more, so you'd be looking at paying, you know, here, let's just call it 1150, right, or 1153 for this one, and then that could be worth, you know, 2750 in theory if our plan works accordingly, right? So that's what we're looking at. That's the setup I'm looking at. I'd probably do this the 700 level, being that that is our target, you know, on the support resistance level, and just kind of go with it. It's a little bit less capital I have to put up, but then the risk reward is also very excellent here, right? Remember, options, you can get out and close them at any time as long as there's another party on the other side of the transaction. And as you can see here, with all this volume and open interest, there certainly will be the ability for you to get out. So, you know, if this goes wrong, right, and I'm completely wrong, then this option could drop in value, right? And if it does, say, drop down to $400 in value, I'd lose 400. But then I'm okay with that, losing that 400 on this, you know, on this trade, because I'm looking at potentially making, okay, 2.5 to 3 times my return on that. So that's a good ratio. So stop losses with options, I don't typically use them. Well, I use kind of a mental stop loss of 50% of what I paid. So we're looking at, you know, $8.65 being paid. So I'm looking at about $4.25. If the value of the option drops to that, I'm gonna close it out. I was wrong and move forward, right? So that's the trade we're looking at for SPY going into this week. But I want to take a quick look at the QQQs because that chart is even wilder, right? And then we're going to jump into Bitcoin and see what we got going on over there. All right, looking at the Qs now, what you're seeing here is our QQQ daily one-day chart. Man, at least the SPY, as it was on its way up, paused a little bit as it crossed over the all-time highs. This thing, there was no quit, right? The QQQs is all about tech, and that's what's moving this rally, right? So it's all the chips, all the NVIDIAs, all the MUs, all of the chips and everything AI is what's just moving this. And so QQQ represents that. And as you can see, this, you know, God bless you if you was in this trade from the bottom to the top. 27% return in a month is just absolutely amazing, right? So as I said before with the SPY, the market just doesn't do this. This is not a healthy market structure. We're expecting the pullback back to our support level of 637, right? So just as I was showing you a minute ago with the SPY trade, you could maybe go out to the July option if you're trading QQQ, maybe look at that 630, 640, 635, 640 strike price, do the little analysis with the Theo Price, see if it's worth it for you. Qs are much more volatile, so you're gonna get higher premiums to pay, so you might have to pay a little more than the 8 we were just looking at. But you gotta go and see if that analysis works. I certainly expect this to pull back here in short time, in the next week or two. Just like with the SPY, the volumes down here do not support this move. A move like this, we should be seeing volumes back up here at the higher averages, and we just are not seeing that even all the way through April. This was the caution I had on the last market report I published, is that these volumes are just not holding up. I don't think they're gonna it's gonna continue to hold up. This is, you know, I say that, and then, you know, where I can be wrong here is you look at this last candle on Friday, and there is no wick at the top of it, right? So we closed at the high for the Qs, okay? So that means there's more upward momentum, at least a little bit more, right? So we have to do our Fibonacci thing again. Pull this here to the top, pull it down. Maybe the Qs do get up to 750, right? Or 745 here, right? So that's what we're looking at, right? So there might be maybe another week. Now, remember, we have a new Fed chair coming in at the end of the week. So the week after this one, we're going to have a new Fed chair. So there's going to be some volatility when that comes in. Maybe that's what does it. Maybe there's some news out of the Strait of Hormuz that pulls us back. Who knows, right? But I'm looking at price structure. I love watching the charts because it tells the story long before CNBC or any of these guys on the news tell you what's happening. You can see it here on the chart. This is the support level we are coming back to, right? Whether that happens next week, the week after, or the week after that, I expect it to happen sometime in May. Okay, so we're gonna say that's what we're looking for to come down to the downside. I wanted to just touch Qs real quick because this move is just absolutely insane. 27% in a month is just unsustainable. It's not possible that it's gonna continue to do what it does here. You know, looking back in history, that's just not how market structure works. You can see even with this big move here, we paused before we continue. There is no pause here, right? So we have to get the pause. That's going to be the little pullback we're looking for here. 50% is not out of the question. That'll get us right back to our 640 levels. So that's what we're watching here in the Qs. Now, before I let you go, the trade I'm really watching is Bitcoin, right? So this Bitcoin trade, we've been in a downtrend in Bitcoin for, you know, the better half of what, 6-7 months now, back in October, all the way down. You know, when I first started the market reports, I was telling you Bitcoin just sideways, nothing happening. Let's see what happens here. Boom, we break the trend with volume, and then we just continue to drag higher, right? So we're now at this level here, which was my top support level, formerly support over here, broke, and now is, you know, kind of acting as resistance, but we actually closed above it, you know, Sunday here, above it on Bitcoin. So we're looking at this Bitcoin trading into the new week as the potential place for this to break out, which also could mean that the SPY is going to come back, but SPY is going to need to pull back before it bounces and goes even higher. So we're looking at Bitcoin. I love Bitcoin. What I'm trading with Bitcoin is not Bitcoin per se. I'm holding my Bitcoin, but I will trade something like a RIOT, R-I-O-T, or a Mara, M-A-R-A ticker. Those are Bitcoin miners. So as Bitcoin is going higher, a lot of those will go higher as well. Some of you are trading MicroStrategies. That's another one as well. So Bitcoin is the one I'm looking at. If you look at the chart on XRP, we've had this long base on XRP as well. And this one is getting ready to break also, right? It's now broken the downtrend. It gets above this line. We could see it go higher to 182, which would be a nice, nice little return there on that one. Ethereum, for some reason, is just dragging, right? It's continued to go sideways. It did break the trend, but it hasn't found its momentum yet. So pay attention to that one as well. As if this breaks and starts closing above here, we could see some much higher levels getting up to 2,800, maybe up to the 3,000 level on Ethereum here in the next couple months. And that's what we're watching this week. So good luck. Hope you learned something from the trade that I went through this week. I'm going to catch you next week on the next weekly market report. I'm the Wall Street Yardie. Have a great week trading. Bye.